Hello all. Welcome to Value Plus the Family Office, Knowledge Plus for Wealth Plus presentation from our research desk. Last week the major news were US Fed announced that it will start tapering down its $85 billion of monthly bond purchases. This may reduce liquidity and liquidity driven inflation. It will also have a major impact on Japan as Japan is already facing the problems of deflation. Price corrections will also be seen in asset class like bullion and equity. Trade deficit, that is imports minus exports of goods and services for the month of May widened to $20.1 billion from $17.8 billion in April. This will widen the current account deficit and rupee will depreciate further. Rupee fell to its all-time low and touched near to 60 mark against dollar. As a result, imports are getting costlier and Indian exporters will get a competitive edge over international competitors. Because of all this news, Sensex fell by 403.69 points, that is down by 2.10% and closed to 18,774 at the end of the week. FIIs were the net sellers in the equity segment, leading to the net outflow of Rs 3,571.20 crores. In the last presentation, we discussed that markets may see high volatility due to the withdrawal of stimulus by Fed. It was very much happened that this week after Fed's announcement, high volatility was seen in all the financial markets. US dollar appreciated by 3.30% and gold and silver were the biggest losers. Gold fell by 6.88% and silver by 9.07%. Next week, the markets will be eyeing on expiry of derivatives contracts on 27th June 2013, CCEA's meeting on natural gas price hike, and government's action on reforms. This week our hot topic is corporate performance. The below table shows the growth in various heads of companies' balance sheet in financial year 2013 compared to previous year of non-financial companies. There is a major decline in the international commodity prices which led to the decrease in the raw material expenses of the companies. Sales increased by 12.60%, but if we compare it to previous year, it has decreased by almost 60%. But on the other hand, net profit has increased by 11.7% as against minus 5.7% in the previous year. There is a growth seen in depreciation also, which indicates that companies have incurred capital expenditures. The ratios like PBT margin, net profit margin, interest covers have been almost stable. No major changes have been seen in the last years. Company distribution based on sales. This table shows companies with different range of turnovers, their growth in sales and growth in net profit. 262 companies having turnover of more than 1000 crores has shown highest sales growth of 13.6%, but their net profit has not increased at the same pace. 326 companies having turnover in the range of 100 to 500 crores have registered profit of 36.8%, whereas their sales has increased by only 4.3%. Companies with turnover of less than 50 crores has shown negative growth. After having a look on the figures of the manufacturing companies, we now move on to the performance of financial companies. Growth in the net interest incomes and interest expenses have reduced. whereas growth is seen in average gross and average net NPAs. NPAs, that is non-performing assets. Impact of economic slowdown is getting reflected in increased NPAs, which may lead to the lower growth in the industry. On the positive side, all the banks have maintained capital adequacy ratio of above 10%. So we conclude that corporate performance has shown improvement in terms of profit even after decline in the growth of sales. Better performance is seen in the large-sized companies. Impact of interest cost has reduced due to lower credit growth. Banks' net profit margin has declined. However, higher concern is on the growth of NPAs. Banks have well maintained their capital adequacy ratio, which is one of the comforting factor. Thank you.